Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm the senior trader at the Forex Super Model, and this is the data cycle review for Monday the 15th to Friday the 19th of March 2021. This is basically our version of the economic calendar. We've modelled the economic tier 1 and tier 2 data, and so let's make a start. We've got here T1 for tier 1, T2 for tier 2, and we've got January as a whole, February as a whole, and then we've got the first 3 weeks of March, 0, 1, 0, 5, 0, 8, 12, 15 to 19th. This is the last week in question. These are discrete variables, and so January as a whole, February as a whole, and this is cumulative. So weeks 1 to 3 are cumulative variables. Right, let's make a start then. China, tier 1, right. -5, -5, 0, +2, +4. We've got, as expected, we've got an improvement in the China data cycle, moving into through March. Tier 2 +10, -4, -3, +8, +11, and we've got a tier 2 improvement as well. So we're going to talk about this when we do the analysis at the end, so we'll rattle through them initially and stop-start as we write them up. Right, the dollar then, -5, +1 Jan Feb, +2, +2, -2. So we've got a slight deterioration in tier 1 data running into March. Tier 2 then, +24, +36 for February, +8, +9, -3. So we've got a deteriorating, albeit positive, data cycle in the dollar. Right, stop it there. Don't go away. We'll put the next two up. Right, welcome back. We've written the next two up, which is the German data and the EUR as a block of the 27 nations. Right. So tier 1 Germany, +4, +7 for Jan Feb. -3, -3, -3. So we've got deterioration in March, but it's holding steady at -3. Tier 2 then, +7, +11, -3, -2, +1. So we've got a deterioration in March, but it's actually starting to roll up on the tier 2 for Germany. Right, Euro zone as a whole, tier 1 -6, +13, -4, -5, -5. So we've got February was strong, but we've got a deterioration, and it's incrementally deteriorating the tier 1 data for the Euro bloc. Tier 2, +5, +6 for Jan Feb, +2, +5, +7. So tier 2 data is actually showing incremental improvement on the positive side for tier 2. So stop it there, write the next two up. Right, back again, next two then, yen, JPY, GBP pound. So the yen then, tier 1, neutral all the way until we start to get some incremental deterioration now in the second and third weeks of March. Tier 2, +17, strong January, not so strong February, but still strong. +4, -2, sorry, +4, +2, -6. So we're starting to roll over it on tier 2 yen data as well. So right, the pound then, +3, +8, so improving January, February, and then neutral for March. Tier 2, +5, +11 for Jan Feb, and in March we've got +1, -2, 0. So pretty neutral on the tier 2 as well. As I say, we'll tidy all this up at the end. So don't go away. Next two. Right, next two, CAD, Canadian dollar, AUD, Australian dollar. CAD then, tier 1, +8, -4, January, Feb, +2, +6, +6. So we've got mixed January and February, deterioration in February, and it's starting to improve March, +2, +6, and steadying off in this week we've just had. Tier 2 then, -1, +7, so we've got improvement Jan, Feb, and we've got a strong March first week, +7, +4, +5. So the tier 2's hanging in there, but with a slight levelling off to deterioration. Right, AUD, Australian dollar, tier 1, +2, +2, Jan, Feb, +3, +3, +6. So we've got fairly steady improvement in tier 1 AUD, tier 2 +6, +8, January, February, and then we've got a weakish first week of March, -1, but then we start to improve, +3 second week and +12 the week we just had. So the Australian dollar tier 1 and tier 2 data cycle are significantly improving. Right, last two coming up. Right, last two, New Zealand dollar NZD, Swiss franc CHF. Right, New Zealand dollar tier 1, +2, +2, Jan, Feb, steady on the positive, 0, 0, -4, deterioration in March, tier 1. Tier 2, -2, -7, deterioration in January to Feb, 0, +2, +2, a mild improvement in the tier 2. Swiss franc then, 0, +2, January to February, mild improvement, steady neutral, 0, 0, 0 in March. Tier 2, -2, +11, strong February for tier 2 for the Swiss, and -1, -1, steady, incrementally slightly negative tier 2. Right, stop there and then we're going to rub this off, do the analysis. Thank you. Right, welcome back. Let's start the analysis then. So the China data cycle, significantly improving this month. We've had, just grab this, we had the positive trade balance last week, and we've had decent China data basically coming along this week. Retail sales was positive, and we've got the China rates decision on Monday the 22nd. Right, so the China data cycle is on the up. The dollar basically had a strong January and February. It just about hung in there the first couple of weeks of March, and it's now sort of looking quite mature and tailing off. So we'll give the dollar. So the dollar's neutral to coming down really. The German data cycle, reasonably strong Jan Feb, and it's now deteriorating. Really, not at a great rate, but it is deteriorating. And the euro, likewise had a strong February, and the tier 1 is deteriorating this month for the eurozone as a whole, and the tier 2 is reasonably strong. So we'll give the eurozone a neutral for the data cycle. Swinging over to the yen then. The yen had a strong tier 2 data cycle in January and February, and it's started to come off now. The yen data cycle is deteriorating. That's a fair assessment of the yen data cycle. Right, the pound reasonably strong January and February. This month so far, neutral tier 1 and deterioration to neutral tier 2. So we'll give it, basically the pound is fairly neutral. That's the fairest assessment we can give for the pound. The CAD then. The CAD is showing improvement basically this month. The CAD data cycle for March, arguably the tier 2 is starting to look a little bit mature, but the tier 1 has certainly improved and is holding ground. So we'll give an up to the CAD data cycle. The AUD is clearly on the up. So the AUD is looking strong in terms of its data cycle. And the New Zealand dollar, let's have a look at that. Well, the New Zealand dollar, in terms of the data cycle, tier 1 is definitely deteriorating at -4, and tier 2 is steady +2. So on balance, the New Zealand data cycle is deteriorating. And the Swiss franc had a strong February, but it's now neutral to slight deterioration. So the Swiss franc arguably is neutral to very slight deterioration. Right. So how do we link that in with what's going on then? So what have we had? We've had a good lot of rates decisions flying around. We've got the China rate decision on Monday, so that's Monday. The Fed has had its rate decision. It's basically said they're going to run the economy potentially hot, and they're not going to raise rates until I think it's 2023, 2024. So the horizon is quite far out on rates, and we've now got a deteriorating dollar data cycle. So the logical conclusion is that the dollar is going to head weaker. The German and the euro, they're neutral to falling. So and they've just had significant COVID issues, so-called third wave of COVID in Europe. So this isn't going to do them any favours. So at best, the euro is going to be neutral to soft. The yen deterioration again, and the yen is going to be linked with the equity transmission. So that's going to be so both roads point to a weaker yen. Now that leaves, as I said, if you look at our sister video, which was the weekly flows, the weekly review, we've basically laid out this analysis in terms of the flows, and now we're going to lay it out in terms of the data cycle as well, and other considerations. So basically these are the majors. So the only other major is the pound. So you've got negative flows going out of the dollar, neutral to negative euro, and Lagarde basically talked the euro down, and their open market operations in the bond market suggest they're going to try and keep yields from rising, and obviously the yen is getting the double hit of deteriorating data and the overall sort of soft nature of Japanese monetary and fiscal policy, and the negative equity transmission. So you're going to get opposing positive flows going into the pound, and the pound on the data cycle is neutral. So it's not great, it's not positive, but it's not negative. So there's not going to be much holding it up there. So what you're left with on the other currency, so you're left with the commodity currencies, which is the CAD, the AUD, the NZD, and the Swiss is the bolt-on sort of subset there. Right, the CAD, often linked with oil. Oil has been pumped, no pun intended, but it's right up. It's above 60. It looks like it's staying above. Well, they had the 8% drawdown, and now it's back about halfway. You can't really say it's going to stay above 60, but we believe it will. So that's the CAD, and the CAD data cycle is on the up. You've got the AUD, often linked with the China, the China story. China's data cycle is improving. The AUD's data cycle is improving. So all roads lead to an improving AUD complex. The NZD, whilst arguably it's linked to the China story, the NZD data cycle is in decline. The NZD has been is operating at 67% from the model floor as a complex as a whole, so it's already been there and done it, if you like. So the NZD is going to underperform the CAD and the AUD in our view. Right, and what else have we got? We've got the Swiss. The Swiss is operating at 70%. It's the strongest. It's the strongest complex in terms of positioning. It's right at the top. It's not got much elbow room to go up. The Swiss bank really doesn't enjoy a strong exchange rate. If it starts wandering away from the euro, which is one of its main trading partners, it won't like it, and the Swiss are likely to do some form of intervention if it gets too divorced from the euro. So the Swiss basically is at best neutral, but more likely to weaken. So what about the overall macroeconomic environment then? Well, you've got this China data cycle improvement. You've got our argument that in July you've got this 100-year anniversary of the People's Republic of China. You've got this situation where China's starting to come out of this COVID cycle. You've got a weaker dollar, which will be beneficial to commodities. So you're going to see probably rises in commodities, which will help the AUD specifically, and the China story. So it's all roads point towards a positive AUD, a positive pound by default. And remember that the pound complex is only operating at 27% of from the model floor. So the pound has plenty of elbow room to come up. So it's all basically, this whole macroeconomic picture is basically pointing to pound strength, CAD strength, AUD strength, maybe marginal NZD strength, but it will seriously underperform the CAD, the AUD, and the pound. So that's where we are. We're long AUD dollar, which would make sense from that. We're short the NZD against the euro, the pound, the CAD and the AUD. And those four pairs have the added advantage in that they have already been significantly pumped at about 85% of their max already. So given the economic backdrop and the macroeconomic picture, basically we're expecting good things from these trades, and we're currently about plus 900 points to the good. Next week or so, we've had the quadruple witching day, Friday just gone, and people are going to be, market participants are going to be gearing up for this type of scenario, we believe, and we are positioned to take full advantage of it. I hope that was useful. See you for the Monday daily briefing, and try and catch the data flow sister video that goes with this for this same period, Monday the 15th to Friday the 19th. Thank you very much.